Hey everyone, okay, this is going to be video number 52, but video number 14 of module 3. And this video we're going to be talking about moving averages. Alright, now I haven't set anything up right now. Alright, I'm going to show you from scratch how it is that I'll actually find a strategy or a set of signals. Alright, so no one's seen this yet, even I haven't even decided to do a pre-mock-up video first of all to see where I can get the signals from or whatever. This is a complete live how to do a strategy signal setup kind of thing. Okay, so we're going to use it in conjunction with the AC, the accelerator oscillator indicator. I don't know why they name it AC. It really puts me off when I try and say awesome oscillator, because you've got the accelerator oscillator and the awesome oscillator, but the awesome oscillator actually has the abbreviations AO on it, so that kind of throws me off a little bit there, so I do apologize. Alright, okay, so let's go ahead and use the moving averages right here. Alright, so if this video ends up getting into more than well, if it gets too big, what I'll do is I'll do a part 1 and part 2 video. Alright, so I'll try and keep them at 10 minutes in length. Alright, so what I'm going to go ahead and do here is left click, drag and drop, and I'm going to put a 200 exponential moving average, and I'm going to apply it to a black with a thickness of the second grade. Alright, and then the reason why I'm doing that is this is what all professional traders do. Okay, they always have a larger moving average, exponential moving average on their chart, and if they don't have it on their chart, then maybe they might have a different signal that they're using to predict their moves, or maybe they just don't really like using it. I don't know, whatever reason it is, but if they're not using it, they're missing out. Okay, now the 200 moving average is a pretty good indication of when the market is going to change direction for a pretty long time. And I prefer to really use these on larger time frames. It's not too bad on lower time frames. It still does give you a pretty good indication when the market's changing, but it doesn't give you an definitive answer whether it's going to be changing for the long term or for the short term. But having saying that, the lower the time frame, the more the shorter term it's going to be. Okay, the higher the time frame, the more longer term it's going to be. Does that make sense? Right. Okay, so with the 200 moving average, what I want to try and do is look for patterns in the market that emerge out of the blue. Alright, and the first thing I'm going to be looking at is the point at where this penetrates. And then I'm going to come down here and have a look at the accelerator oscillator and see what bar it actually lands on, regardless if it's above the histogram, if the histogram is above the vertical scale, or whether the histogram is below the vertical scale. Alright, so okay, so here we see it's on the red one, and then I'm taking a look at this one here where it penetrates. It's not below. Okay, I'm going to take a look at this one. That's not below, and that one's not below, but that is red, and that one's red. And it came down, and that one was in a downwards trend, but that one opened and closed above, but that was there you go, that was a green one, that was above, so that was good, plus the signal was on a support line, so that's good as well. Okay, so that's something to keep in mind. Now I found a match of what it is I'm really looking for. I want to try and find other instances in the market that also ring true as well. Alright, I want another area in the market that actually says yes, you can go long here. Alright, okay, we've got a green candle here. It doesn't open above the black line, but it does close above the black line, and it is on a green bar, and it is on a support level, so that is kind of good. It's not exactly the same as this one, because the signal here that we were looking at was this particular bar. Let me just zoom in. You do see this one here, you can see like the close and the open, actually open and closed above the 200 exponential moving average. Alright, so we had, how many rules did we have in that? Rule number 1 was the green bar, and it was above the histogram, so that was 1. The black line was penetrated, it was it closed and opened, so there's 2 in there, so there's 2 and number 3 in there, open and close. That's open, close. 2 means open, 3 means close. And the next thing that we were looking at was the support line, which was 4. Alright, so we wanted an excuse to go along for that buy. Okay, so we've got 4 elements of our buy signal. Okay, and what we want to look for is to find as many of these 4 elements as possible to warrant this buy signal. But we need to look back to see if we can find these 4 elements. Now if we only find 3 out of 4, then we need to say to ourselves, on what conditions, when you see 3 out of 4, should you really go ahead and buy or sell this trade? Well, one of the conditions that you could use would be the sentiment of the candle. It's huge sentiment behind these 2 candles. It's telling us to buy. Alright, these candles here to the right hand side are continuation candles. Alright, you always get continuation candles after a big spurt up. These don't really count because the bars aren't really that large. Alright, this one counts because there's huge sentiment in that one to tell us to go short, and then there are some continuation candles afterwards, and then the market goes sideways because we're probably on a support line somewhere. Then we have market sentiment behind this one, and this one, and this one are continuation candles. And then it stopped because we were on a resistance line. Alright, so with that being said, let's go back and see if we can find as many of those 4 instances or 4 elements as possible. Alright, okay. So I'm going to get my crosshair tool out, and I can see that this one here actually closed above, but it opened above the line. So plus this is above the histogram, but it's red. Now I'm not going to completely dismiss those 4 elements now because I haven't really had a concrete analysis yet, so I'm going to try and store this in my mind and then process it a little bit later. But okay, here we got one here, it closes below and also opens below the 200 exponential moving average, and it also lines up with a red bar of the Accelerator oscillator as well, and it's below the 0 line. Alright, so that's good. So let's see if we can just write these down so you can see. Alright, so we've got green bar, so that's number 1. Sorry, red bar, beg your pardon. We've got red bar number 1, it's below the vertical scale, so that's good. We want that. And then we've got the red candle right here. It closes and it also opens above, below the 200 moving average, so that's good. And it's also, well, we're actually below the resistance line, so that's good for a sell. Alright, so those are the 4 elements that came through true. So we've just found a buy signal, and we've also just found a sell signal with those 4 elements intact. Okay, let's see if we can see if this actually rings true again. Right, here's one right here, but it actually closes above the vertical scale here, so that's no good. So let's take a look at the next one. Okay, I'm not going to keep on looking for the red ones afterwards. I really only want to pay attention to the first maybe couple of bars above or below the first initial breakout. Alright, so here's breakout 1 and breakout 2. But this one actually opened above the line, so that's not going to be no good because I'm really looking for those 4 elements mainly. Okay, and here is one right here. Alright, so we can see indeed that it was on a red bar here, and it's below the vertical scale. The histogram's below the vertical scale, so that's good. Then we can see that this bar does indeed open and close below the black line, so that's good. So that's another 2 and 3 elements there. And we're also looking to see basically, are we on a support or resistance line? Well, let's just take a look at that, and I'm going to draw a marker around about there, and I'm going to move back a little bit. Alright, look at that. Coincidentally, alright, we have a great deal of support and resistance levels there. So that line rings true that we drew. So we're happy with that. Now, with this particular bar that we're on, which is right there, we go short on the next bar. Okay, we go short on that little tiny bar right there, and we're below the resistance level. So that's good. And you can see down here, which is now our other support line that we drew from previous analysis, and we can go ahead and target that as our TP level. Now this, where we get in, is right up at 141 area, and this is down at 139, so that's like 800 pips, and that's off a daily time frame. Alright, now if you did this at $10 per pip, which is one lot, if you did it on like a $10,000 account, that's $8 grand. Now how long did it take to reach that level? Well, this will really come down to you, because it's patience really at the end of the day. Alright, so let's just take a look at that from where we get in, from there to the point where it actually gets hit. That's 44 bars. That's 44 days. Now can you really wait for 6 weeks? Alright, can you really wait for 6 weeks for $8,000 to make 80% on your balance? I don't know, but we could go in at 2 lots and then start taking off, you know, 50% of our position. So we take a look at the previous bar there, and that's like 192 pips. So for every 192 pips that it comes down, you move your stop loss, and your stop loss would have been at the next previous high, which would have been up here, and your entry point would have been here. And you look at that, that's 443 for an 800 pip gain, so that's a 2-to-1 ratio. Alright, so that's pretty cool. And then once it reaches, you know, 192 pips, you then go ahead and move your stop loss maybe half of that gain, or move it to break even, to actually safeguard that trade indefinitely, or even maybe book in 50 pips, so at least the times that you have waited, you're going to walk away with a little bit of money. Alright, so that's just one way that we could look at it. Now we've just got our master signal in. That's what I refer that one to as, because we're actually using a larger moving average here, and that's normally the big daddy of all. That does really tell you where the trade is going to go afterwards. Alright, now you might, you know, here's another area right here, and you might say, well, okay, well look, if I could have gone long here on this particular trade. Well, if you notice that the moving average is going sideways, and plus we're on a bit of support and resistance levels there as well, so you wouldn't have gone long or short there because you're sitting right on that line. You want really the signals to be above or below a support and resistance line. Like here, this is where we would have actually gone short, and it was actually below it. Alright, this is the line here, and our signal was right down here. Alright, so we would have been okay with that. Alright, so let's go ahead and take a look at another one. I don't see any more really off the top of my head. And here is one right there that you might have actually chose, but it's only got like 3 out of 4 elements there. But again, here is some more support and resistance levels, so that might not have worked out well in our favor anyhow. So let's go ahead and use some other moving averages. But before I do that, I'm going to pause the video momentarily, alright, and then we'll be back with part 2. See you in a bit.